Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. Today's video, we're going to be taking a look at the stock market, other indicators, as well as the Magnificent Seven stocks. Going over to fear and greed, we are still into fear on pie vesting and deep fear on CNN. So, are we at possible good value times in the markets? I'll show you the data and share why I think that might be the case. Of course, we've had this phenomena, which I think has started a little bit earlier than normal, which is the inauguration dump. There was the presidential pump where markets, crypto ran up for a few weeks, but then we've been going sideways. And you can see on average, this tends to be around 3 months, give or take. So maybe we can expect to see some sort of macro bottom in the near term here in January or February, and going over to just what happens when we have new presidents and the cycles of the market returns when we have new presidents. We can see that the second year tends to be the most bearish one, and that lines up with other data I've talked about, whether it be crypto or the yield curve inversion. So what I'm trying to show here on my stock market videos is how can we collect a variety of data to help inform our decisions. So if it's just one piece of data, that's fine. You can take it with a grain of salt. But when different bits of data start to converge, then you want to start paying attention. Of course, since the Fed started cutting rates, we've been in this non-recessionary uptrend. And sure, we are probably in one of these dips right now, but you can see on average, we have about 250 days up or so. So that'd be about, what is that, 8 months, 8 months, give or take, since the Fed started cutting rates, and they started cutting in September. So as far as this chart's concerned, there's still room to run. And how has the Fed been cutting rates? Well, they've been cutting by an average of 25 basis points. And you can see the last two cycles of cutting, when they were cutting by an average of 25 basis points, there was still room to run in the markets. Even though there were some troubles on the horizon, that there was still room to run for a year or so. And getting over to the S&P P8 ratio, overall price earnings ratio, something to keep in the back of your mind is that if we are looking at stocks right now, it is an expensive time. I don't know where the top is, but what I do know is this is an expensive time. It's expensive for stocks, it's expensive for housing, but that doesn't mean it can't get more expensive. So do be long term minded and focused when it comes to investing your hard earned money. And that's why I think it's more crucial now than ever to be patient, let the value come to you. That can be hard to do, it's easier to chase, but in the medium term, that might end up getting you wrecked sooner than later. Sure, it could pay off one day, but do be mindful of that with your money. Going over to crypto real quick, we'll take a look at that chart as well. Crypto finally fell down into neutrality territory. So it was hanging out high in greed and finally has come down. So you can see when we've had these spikes in greed the last couple times that it's just gone sideways and down. So maybe we are getting ready to see some sort of bottom process on crypto. Of course, subscribe if you want to hear more of my thoughts on the crypto cycles. My channel is more focused on crypto stuff. That's what y'all, as the subscribers, seem to like more. I also talk about the Bitcoin mining stocks along with the rainbow chart and altcoins available on Coinbase and Robinhood. So let's get into it. So we've seen the S&P go down for 4 weeks straight. What I will note here, though, is this is the stock RSI indicator, as you can see, and it might be getting ready to bottom. And we see that right now it's having a good bounce off the 20-week moving average, as well as this trend line. And if you're wondering where that trend line is from, it's all the way from this peak in August of 22. So what I've done, you can zoom way out here. You'll notice that we've been in the secular bull run since the great financial crisis. The S&P has been crawling up in this channel for some time. And in the most recent bear market downtrend that happened in 2021, 22, these peaks, if you draw them out, I do think they're showing where right here, you can see where some tops and some bottoms are. So a couple good areas of support there. It's basically another trend line or parallel channel within the channel. So some possible good news or an area for the S&P to maybe bottom. We also see some bullish divergence here. So you can see the price of the S&P getting lower and the stock RSI going higher, as well as it's bottoming, hopefully, on the 100-day moving average. You can see that in the past, this has been an area here. It pretty much got down to it. Maybe it didn't quite touch it. There it did. Here it didn't quite touch. But the 100-day moving average has been, in this bull run, a good time to look for a bottom. There was this time here in August when there's the whole yen carry trade unwind, but otherwise we might see this start to turn around soon. So I think that's pretty good news. We do need to wait for more confirmation on the weekly. We don't have a weekly buy signal or a green Heikinashi yet, but hopefully that's coming soon. Of course, today we've had unemployment data come out. Let's take off the RSI here. And what you'll notice is that unemployment ticked down. So you would figure that would be positive for markets. And so far you see, well, the market's reacting a little bit negatively. I think the narrative is going to be that we've heard the Fed talking about rates. We're going to go back to the rate cut narrative in here right now, is that if the economy is staying strong, that's not going to be good for fighting inflation. So why is the Fed going to continue wanting to cut rates? I think part of the reason they were cutting rates anyways is because the money they owe on the balance sheet, the interest on debt is the third largest item on the government's balance sheet, and they were trying to help with that as much as they could. But I don't think this bodes well. Excuse me. I don't think this bodes well for future rate cuts. So it's possible that's going to start being priced in right now. I believe that when the Fed for sure pauses, that might be somewhere around the time that we see markets go up. So let's go back to the S&P here. I'll show you what I mean in a moment. So let's go way back. When the Fed pauses rates, this is one of the cycles here that we had in 1998. This was the dot-com bubble. This is when the Fed first cut rates after holding higher for longer. When they paused rates, the market still exploded higher. Okay, you guys see what I mean there? Even in COVID, and we can even look at Bitcoin, if you will. This is when the Fed first started cutting rates, this vertical red line, and they were done cutting around the bottom. When they pause, that's when markets explode. So if we take a look at interest rates, we have to go click all here. Again, keep these dates in the back of your mind. So this is when the Fed cut. Keep these dates in mind. This is when they were done cutting in 98. That was November of 98. And let's find the COVID time. That was March of 2020. Okay. November 98, March 2020. Heck, I'm sure these other dates might even work. December of 08 and June of 03. Let's take a look at the stock market there and where those were. So we know March of 2020, that was near the bottom. Obviously, there was December of 08, and that was somewhat near the bottom. I'd say that's close enough to the bottom. Yes, it fell off one more time, but that would be one of the last best times you could have got in the stock market. There was some time in 03, I think it was around this time, close to a bottom. Okay, and then there was 1998 as well. I want to say it's December 98. Okay, so when the Fed pauses, I think there's the last gasp of the bull run that happens. At least I'm hoping so. After the data we have here, hopefully we see something like that happen, and that any negativity right now, even though we have good jobs data, I'm sure that's the narrative right now. There's good jobs data. Why is the market still going down? I think that it's being priced in, future rate pauses, and the Fed not cutting, money not being as easy to borrow. And so then when the pause does happen, we can start turning on the afterjets and looking for the markets to have their final push up somewhere, at least for the stock market, 6,500 to 7,000. Maybe crypto, Bitcoin going 120 to 150K. All right, let's move on. Let's get into the VIX, and as you can see, The volatility index, it is encountering a little bit of resistance here on the weekly in that it hasn't closed or gotten above the 200. It is at the 100 week moving average. And so if it rejects here, then we could still have low volatility for longer. I like this as a leading indicator. That's a percent of stocks above the 200-day average. And you can see that those percent of stocks, it's about 49% of stocks are above their 200-day average. So this is marked local-ish bottoms. There was one deeper bottom. Again, that was a yen carry trade time in August, so it could get worse. But even if it did, this trend line that's been happening from these bottoms would only be around 42%. So something to keep in mind. I think we might be able to find some good deals in this area. As far as the yield curve inversion, let's turn off the moving averages. We don't need to see all that. When the Fed is raising rates, the yield curve typically gets inverted. When it starts to uninvert, there is usually around a year to 2 years before we start to see a market bottom. So you can see yield curve uninverts, market bottom. Going back to the great financial crisis, yield curve uninverts, and then market bottom, which was about, in the red vertical lines, by the way, that was within a month of the market bottom. So that was about 640 days. And when the yield curve uninverted here, that's about 560 days. So we have an average of 600 days. Let's note though, this is a deeper, longer inversion. So maybe it's going to take longer until we have a bottom. That is possible. So if we do, let's just play with those numbers a little bit. 600-ish days, you can see at the bottom, that's May of 26. But because it's a deeper inversion, maybe it takes longer to play out. Maybe it's later in 26. Again, that lines up with this data that 2026 might be the year to expect bearishness entering in the stock market. In 2025, some higher volatility, maybe the last gasps of the bull run, but then 2026 is when we see bearishness. So that's the way I'm leaning. Again, unemployment data looking good, coming down a little bit. Log scales a little bit better. So you can see it was at 4.2, came back to 4.1. So strong labor market. The Fed's not going to cut as much. I believe rate pauses are bullish. I showed you why that is. And if it is bullish, what my guess would be is that we'll see markets pump. And then once the Fed starts cutting rates by 50 basis points, that's when we are going to know that something is broken in the economy. And this will be the time to get out, as you can see. Once they start cutting large and fast, those were the times to get out in the great financial crisis and dot-com bubble. So that's part of my game plan, at least what I'm looking for. Going over to crypto, we can see that Bitcoin, let's turn on our moving averages again. We can see that Bitcoin has been coming down a little bit underneath its 50-day moving average. In one of my videos this week, I talked about how we do have this Hull sweep band on the weekly that is around this 85, 88K area, where on the daily, yes, it's going to move. On the daily, there's the 100-day moving average around 88K. So even if Bitcoin went down a little bit further to 88K, I would not be so concerned. That would be an area I'm looking for in here as far as a bottom. So we'll talk more about crypto. I'll do a live stream after uploading this video. Let's get into the Magnificent 7 stocks. So this is a Fibonacci retracement tool for anyone new here to the channel. You can draw them low to high, high to low from different areas. And what do we see with NVIDIA? Well, we see that since the top, it hasn't quite come back down to the 236. So you look for value in those areas, or the 100-day moving average, both around this $130 area. It is, however, finding somewhat of a bottom here at the 50-day at around 138. So you can see NVIDIA has had good bounces off the 50-day before. That's possible that's what happens. Or if it gets into the deeper value areas, it is like the 100-day moving average at most. So if you believe that there is still more bullishness to come in this market cycle, you might be waiting and being patient for that 100-day moving average, or one of these lower fibs. But I'd say right there would be an area to watch out for. Would I be buying NVIDIA right now? Me personally, no. This is within, there's a couple reasons why, but taking away indicators, we're closer within the macro highs than we are the lows here. And plus, the amount of strength that NVIDIA has had, this is just zooming out a little bit. It has ran up around 1,200% over the course of a couple of years, right? So when you step back and think about that, that's a lot. And it doesn't surprise me that this vertical move is now regressing. So if you love NVIDIA, not the worst area to possibly start considering dollar cost averaging, but I would be looking more so down here or lower. That might not happen soon, but that's what I would be waiting for. Let's go over to Microsoft. And so for Microsoft, we have instead a fib drawn high to low, and our fib's taken off logs. So you can see Microsoft, it is hanging around, it's 1618. Got above it, got below. It's been forming this massive wedge. And Microsoft, here I think it's at decent possible dollar cost averaging levels because it's closer to the 200-day moving average. It is wedging in here too. So if Microsoft starts to turn around and challenge this 1618, by the time it gets wound up in this wedge, usually these wedges break up pretty big, up or down. And so down, of course, we have the former all-time high for Microsoft, but it moves up. The 2618 is all the way up here at 567, as crazy as that is. So Microsoft, I think a couple good areas here. We have the trend line, the lower trend line, and the wedge. We have the 200-day. So if you love Microsoft, I'd say this is beginning of good dollar cost average discount opportunity. Apple coming back down to the 100, you can see that's what it's like before. When I'm looking at moving averages, I'm looking at what is it like before. Of course, there is the 200 and the 1618 here. So it is possible Apple comes down to this area at around 220. Let's take a look at Apple on the weekly. So yeah, you can see right there, the 20-week moving average, it has come right down to it. It has not gotten under that 20-week moving average in a while. And anytime you see very big wicks underneath the candle bodies, that means people are buying that up. Of course, it can still break down, but that 20-week moving average, that has been a strong area for buying, and that's what's happening again right here. If it did get lower, the 50-week moving average is again at that 1618 at around 220. Let's go over to Amazon. Amazon, it got above its former all-time high, just hanging out sideways. May come down to the 20-week moving average, but the 1618 is there at around 255. Let's take a look at the daily. So it hasn't even come down to its 50-day moving average yet. And you can see Amazon is like the 100-day in the past. So if it got down to the 100-day at around 2 or 5, it may be worth taking a chance at it. Google, you can see Google hanging out at the 1618. So what were we just talking about with wedges? So first of all, we drew this fib from the macro high to the low. Google got up to the almost to the 1618, made a low, a high, and a low, another wedge. And then what happened? It broke out of the wedge. It had a nice move up to the 1618. And you can see on the daily, Google is using the 20-day as support. And the candle body's closing at the 1618. So Google right here looking really good. And if it got to the 2618, guys, it's all the way at 261. And I think for some of these Mag 7 stocks that aren't in the high 3 trillion area, like NVIDIA, Apple, and Microsoft, stuff like Google and Meta has room to run, Amazon included. So just keep that in mind. I think this is looking pretty positive after this breakout, and it's been holding this strength up here. I think Google might be getting ready to, again, that 2618 area. You might start looking for that 260 up there. Meta, of course, we know Meta has loved its 20-week moving average as support. Every time it gets to the 20-week moving average, it has another move up. And even with all the bearishness recently in the market, in the S&P, look how this thing is still moving very strong. And we've been talking about how with Meta, its 2618 target around 860. So crazy to think about. Let's go to Tesla, and then I'll take a look at Palantir again, because I know that's a popular stock a lot of people like. And so Tesla, it had this channel it was moving up in I think I took the fib off from before. We can draw the fib back on, but you can see it's right around the former all-time high. I do wonder, actually, if we draw a fib from the high to the low, if it's closer to the 888. Let's take a look at this. Yeah, it's possible it comes down to the 888. Okay, so zooming in, this is on the daily time frame. We had Tesla in this channel moving up, and when it broke out, got above its former all-time high, used it as support, came down underneath its moving average. Right now it's using the channel as support. If it works its way back in the channel, that's something we might see. So we have the 888 to the 50-day moving average around 350 to 370. We have the 100-day and the 786 moving average 306 to 318. Let's zoom out on the weekly and see what this looks like. So on the weekly right there, even more so the case that the channel that is being bought up, see those strong wicks? So I'm kind of leaning towards this being a bullish sign if the stock market was to start to flip more positive soon, and we might see Tesla get up somewhere around 600 bucks. You can see there 608 for the 1618 fib. And last, let's take a look at Palantir. And Palantir, what do we see? So let's put this on auto, another high to low fib. Got to the 1618, got a little bit above it, and now you can see that wick though. It's being bought up on the weekly on the 1618. Palantir having such a strong move up, and it's also finding support at the 50-day moving average. We've seen Palantir have good bounces off the 20-day, but when it gets under the 20-day or even the 50-day, where has it like support before? We'd say the 100-day moving average, these times back here, and almost to the 200-day, just this one time. So if we see that repeat and we see Palantir fall off, we can see some support at around 56, and maybe it doesn't quite get to the 200-day. That is the former all-time high though, at around 45 bucks. So maybe it finds some support between 45 to 56, somewhere in there, before shooting up further up again. So anyways, hope you guys enjoyed the video. Like I said, I'll be doing a live stream here after this video uploads. Thank you so much for watching, and have a wonderful Friday. Take care.